Hello and welcome to Business 360. I'm Shireen Bhan. The headlines we're tracking for you this evening. The markets see a range-bound session ending mildly in the red. Sources say that the NSE is in preliminary talks to extend trading hours for the derivative market. Exchanges are of the view that current trading hours are pushing volumes offshore. Adani stocks continue to decline, with the group losing nearly 20,000 crore rupees in market cap today. Adani Total Gas, Adani Transmission and Adani Green have hit the lower circuit more than 10 times since the Hindenburg report was made public. The group has now lost more than 11 lakh crore rupees in market cap. The Met Department sounds the alarm over above normal temperatures in large parts of northwest India. Delhi records its third hottest February since 1969. The Met Department says that unusually high daytime temperatures could impact crops in Punjab, Haryana and Rajasthan. The government invokes emergency powers, asks imported coal-based power plants to run at full capacity for 3 months from the 15th of March and sell surplus power to exchanges. The move comes as India is expected to see peak power demand in April. The order implies that at least 15 plants will have to operate at full capacity. India and Singapore linked their online payment systems to facilitate cross-border transfers. Prime Minister Modi and a Singaporean counterpart were present at the virtual launch event. India's UPI and Singapore's Pay Now. Users can transfer money using only a mobile phone number or an ID. G20 finance ministers joint statement to strongly condemn the war in Ukraine when they meet in Bengaluru but may not name Russia. The ministerial declaration will call for urgency in addressing debt vulnerabilities and strengthening multilateral development banks to deal with transboundary challenges and catalyze private investment. A defiant Vladimir Putin accuses the West of inciting a global war to destroy Russia. This after US President Joe Biden walks the street of Kyiv as the war in Ukraine nears the one-year anniversary. No relief for the people of Turkey and Syria. Another earthquake of 6.3 magnitude jolts border regions, killing 6 so far, injuring hundreds. Fear of more tremors keep people away from buildings. Chief of the World Health Organization says the situation in both countries is concerning. Entry-level mobile recharge tariffs see a sharp jump of 340% in the last 3 years. Bharti Airtel's prepaid plan, priced at 35 rupees in December 2019, now costs 155 rupees. But that's not the same for higher-priced plans that have only seen 2 tariff hikes in 3 years. Brokerages say subscribers may switch to telcos offering cheaper plans. Well, let's go straight to the day's trading action. A range-bound session saw the markets failing to hold on to their gains today. The Nifty and the sensex ending flat, but with a slight negative bias. While banks fell in line with blue chips, mid-caps underperformed today, and that index fell over 0.25%. Reliance did lend some support to the Nifty, while IT stocks remained a drag. BSE companies have raised a market cap of close to 70,000 crore rupees today. Well, speaking of the markets, we learned from sources that the National Stock Exchange is in talks with market participants on extending trading hours for derivatives. However, sources also add that there is no deadline or timeline by which this decision needs to be taken. Prashant joins us now with the details. Prashant, this is not the first time that an extension of trading hours is being discussed. There's been plenty of back and forth in the past. Where are we today?
Shireen, at least, over the last 10 years more, we've discussed this subject over and over. It comes up every few years. And it has come up now as well. So there is fresh impetus, and I'll tell you why. What we learned from sources is that exchanges led by the National Stock Exchange, the largest exchange, is in preliminary discussions with market participants, brokers mainly, both large, small, to discuss this very issue, which is, should trading hours be extended? And when we say trading hours, the segment we are talking about is basically extending trading hours for equity derivative contracts. Nifty futures is largely what I'm referring to. As you said, no real timeline or a deadline has been kind of set that a decision must be taken by this so-and-so date, or this has to be rolled out if, the decision is to go ahead with this by so-and-so date. So it's an open-ended kind of discussion. But what we what we understand is that an effort is being made to reach out and get serious feedback to kind of look at this once again. Now, there is widespread acknowledgement, and I spoke with, most participants within the stockbroking ecosystem, the stock market ecosystem. There is widespread acknowledgement that before a decision is taken, any decision is taken, the back end has got to be set, which is technology, settlement issues. Right now, markets close at 3:30. There is enough time for settlement. Now we move to T+1. How will all of this happen if trading continues, right? So these are issues which must be settled before a decision is taken. There is acknowledgement of that. Exchanges are of the view that this will be done. Whatever is done will be done in a very gradual way, and they point to the implementation, the rollout of the T+1 settlement cycle. It started with a small bunch of stocks. Then it included more stocks, and over a period of 2 years, the T+1 settlement thing was rolled out. So it's going to be gradual in nature and not everything from day one. The argument which is being sort of given by, of course, this is a view which has been publicly expressed as well, and this is not new. Exchanges do believe that the current hours push volumes offshore, that's been a pain point for exchanges and even, sort of regulators, etc. as well. So how do we bring that volume back? And this perhaps is one way to do it. The other argument which is given, and I think this is something which a lot of trading community also agrees with, is the fact that investors can react to global events much faster. For example, you got a Fed decision late at night. And you've got an instrument here, trading, which you can use to hedge or take a position. It allows you to do that. Where does the regulator stand in the midst of all of this? As of now, we've not heard, of course, officially at all, but there is an enabling provision which was passed by SEBI in 2018, which allows for this to happen. So it's well within the powers of exchanges to roll this out, because SEBI has already said you can do it. So in the case of F&O segment, this can be extended till 11:55 p.m. And of course, in the case of the cash segment, this can be more extended till 5 p.m. Of course, this is a very large change if they would so decide to go ahead with it. And I'm sure the regulator at some point will want to say and will want to be consulted, etc. But technically speaking, the enabling provision is very much there. But I just want to again emphasize all of this is very preliminary discussion, but this is certainly happening, and we'll continue to report on this in terms of how this moves forward. Back to you.
It is a developing story, and I'm sure there's going to be plenty of opinion both for and against it. And of course, we'll be tracking that right here on CNBC-TV18. Prashant, many thanks for joining us. While staying with the market action, the Adani sell-off continues. The group's stocks have eroded a market cap of close to 20,000 crore rupees just today. The fall in the market cap since the Hindenburg report now stands at over 11 lakh crore rupees. In fact, the market cap of Adani Total has eroded by more than 3 lakh crore rupees to slip below 1 lakh crore rupees as things stand. 6 out of the group's 10 firms ended the day in the red, with Adani Total, Adani Green and Adani Transmission hitting the lower circuit. Vivek is here with more details. Vivek.
Well, we are analyzing the price action as far as the Adani Group stocks are concerned, and it's quite clear, the kind of severe price impact that, that particular news flow has had as far as the group stocks are concerned. However, a few of the group stocks have managed to recover from the recent lows and are trading 20% above, in some cases, from the recent lows that they have hit. When you're talking about the individual stocks, Adani Total Gas has been the stock that's taken it or has had the hardest impact in terms of the prices, down almost 75% from the peak. When you're talking about Adani Enterprises, down over 50% and continues to trade at the recent lows that the stock was trading at. When you're talking about Adani Green Energy, down 70%, and there has been no recovery in sight for this particular name. Adani Transmission, similar story, almost down 70%. And continues to trade at the recent lows. Now coming to Adani Ports, interesting situation here. The stock is down almost 23% from the recent peak. However, the stock has managed to recover almost 25% from the recent lows that the stock saw. Adani Power around 38% fall since January 24th. However, from the recent lows, it's gone up by almost 22%. When you're talking about Ambuja Cements, down almost 30% from the recent highs or January 24th highs, but the stock has managed to recover around 6%. NDTV as well as ACC continue to see sharp correction. Both of these stocks are down between 20 to 25%. Now some interesting data points coming in some of the cash stocks. Adani Total Gas, now this particular stock has hit the lower circuit for 18 straight sessions, and it's interesting to keep in mind that the circuit limit for these particular stocks has actually been revised from 20% first to 10% and then to 5%. When you're talking about Adani Transmission, the stock hit the lower circuit again for 13 sessions. Only on Feb one particular day, the stock managed to close at the upper circuit limit of 5%. However, the circuit limit over here too was changed from 20 first to 10 and then to 5. Lastly, Adani Green, this particular stock has hit the lower circuit for 13 sessions, and when you're talking about February 17th, closed with minor gains of 2%, and the circuit limit here too has seen multiple changes from 20 to 10 to 5. So clearly the price erosion has been quite severe, but select stocks have managed to bounce back quite sharply from the recent lows.
Vivek, many thanks. Now, in the commodity market, crude oil prices continue to be on a tight leash. A stronger US dollar and caution ahead of the US Fed's minutes have kept oil prices in check. Brent hovering around the $83 a barrel mark. Now, summer seems to have arrived much earlier than expected in many parts of the country as temperatures soar across states. The Weather Department has warned of rising temperatures over the northwest of India, parts of Maharashtra, Goa and Gujarat. Speaking to CNBC-TV18, IMD scientist R.K. Janmani said temperatures are likely to be above normal by 3 degrees Celsius in central and western India over the next 5 days. The Met has also issued advisory to farmers suggesting chances of adverse effect on wheat crop over the next 5 days. And the government is bracing for a surge in power demand this summer. The Power Ministry has mandated imported coal-based power plants to operate at full capacity for 3 months, and that is starting the 15th of March. Abhimanyu is standing by with more details. Abhimanyu, take us through the government's plan of action.
The Union government has invoked Section 11 of the Electricity Act after a request by states. This will mandate all imported coal-based power plants to operate on full capacity from the 16th of March to the 15th of June. It remains to be seen whether the ambit of this order will be extended after 15th of June, since the current request had come in from states, and any further extension in this date will be based on the peak demand being faced by India in June. As of now, the projection for peak demand in April 2023 is 229 gigawatts, out of which 193 gigawatts is to be supplied by thermal power plants. 15 ICBs will be affected by this order, who will have to operate on full capacity. The variable cost will be fixed by a government committee, as the government has recognized that the power purchase agreements do not factor in the heightened and increased cost of imported coal. It remains to be seen what further action will be initiated by the states in this regard in order to avert a situation like the previous year, where various states had complained of depleted coal stocks, whereas the Union government had maintained that ample coal was available for states, but there was lesser offtake from their end.
Abhimanyu, many thanks for joining us. Now, packaging company Uflex is under the tax department's scanner. IT officials have searched the company's Noida office over allegations of hiding income to evade taxes. Sources add that the IT department is probing if the company concealed income via the issuance of bogus bills. This is not the first time that Uflex is being searched by tax officials. Back in 2014, IT department had discovered bogus sales worth 100 crore rupees. India and Singapore have linked their online payment systems to facilitate cross-border transfers. Prime Minister Modi and a Singaporean counterpart were present at the virtual launch. India's UPI and Singapore's PayNow users can now transfer money using only a mobile phone number or an ID.
UPI PayNow लिंक का लॉन्च आज दोनों देशों के नागरिकों के लिए एक ऐसा उपहार है जिसका वे उत्सुकता से इंतजार कर रहे थे। इस सुविधा से दोनों देशों के बीच रेमिटेंसेस का सस्ता और रियल टाइम विकल्प संभव हो पाएगा।
Kotak Mahindra Bank is reportedly on the lookout for a new CEO to replace founder Uday Kotak. According to a report by Bloomberg, the bank is in discussion with consulting firm Egon Zehnder for the same. Group's president and director Shanti Ekambram and KVS Manian are likely to be the top contenders for the job as internal candidates. Uday Kotak has been at the helm of the bank since its inception and will have to transition from the CEO role following the cap imposed by the RBI on the tenure of the top bank management. Debt vulnerability is controlling inflation, financial stability, strengthening multilateral development banks. That will be on top of the agenda when G20 finance ministers meet in Bengaluru this week. But one issue that's likely to dominate the agenda is the suffering and disruption caused by the Ukraine-Russia war. Parikshit is standing by with more details. Parikshit, what can we expect from the final communique of the G20 meeting in Bangalore?
Yes, we have been able to exclusively review the G20 communique, which is going to be issued on the 25th of this month. The G20 declaration is likely to strongly condemn the war in Ukraine. The joint statement is likely to highlight the immense human suffering and elevated financial risks caused by the war. The ministers will strongly state that the threat or use of nuclear weapons is inadmissible. They will emphasize that dialogue is vital and today's era is not a war. But it's possible that Russia may not be mentioned in the communique at all, as the G20 works with consensus, and reference to Russia in the context of the war may not be acceptable to Russia and China. One of the big economic priorities that G20 finance ministers will highlight is the need to press for urgency in addressing debt vulnerabilities as the global slowdown, inflation and tightening financial conditions may worsen the debt situation in emerging markets. The minister's declaration may emphasize on the need for coordination by official and private creditors to relieve debt distress. Meeting will call for swift resolution to debt issues in Zambia, Ethiopia and Sri Lanka as well. The finance ministers will call for agility and flexibility in policy response, use of macroprudential policies to safeguard against any downside risks. The ministerial statement that will be issued after the meeting on the 25th is likely to focus on temporary and targeted fiscal support to vulnerable groups while maintaining medium-term fiscal sustainability. The statement will also say that central banks shall remain strongly committed to price stability and will also focus in great detail on the need to strengthen multilateral development banks to deal with transboundary challenges and catalyzing private investment.
Parikshit, many thanks for joining us. And staying with the G20, my colleague Ritu Singh caught up with the Economic Affairs Secretary Ajay Sheth ahead of the crucial meeting. Sheth said that policy coordination is high on the G20's agenda. He said that a global policy consensus is imperative before framing rules on cryptocurrencies. Take a look.
Prices of the commodities and the energy prices, which had gone very high in the year 2022, have eased up a little. But when it comes to the inflation, global inflation being high in several countries, that is still a concern, though the inflation has eased somewhat, but is still around the tightening monetary policy, how the coordination should happen among different countries, what impact it can have on each other economy, plus as the inflation rates are high, continue to be high, and there is a tightened monetary action, then the global growth as well as the global trade gets impacted. So it has implications for everybody. So that's it, the policy coordination is very much needed.
What should we expect on cryptos? Although you say, it's a boundary-less issue and therefore global consensus is needed. And it's not a two-day issue to be resolved during just the G20 meeting. But what should we expect the deliberations will be centered around?
These are, again, I'm going back to my original reply, these are complex issues. Yeah. They don't have a quick solution. Yeah. They require a deep thinking and then finding what is in the common good. So the deliberation, each meeting tries to take forward the thinking process, and then the countries go back, mull it over, meet it again. So as a presidency, our goal is to facilitate that intense discussion among membership and international organizations so that collectively we can find solution. As a crypto asset is one particular aspect wherein global policy consensus is absolutely essential.
Well, that is the Economic Affairs Secretary at the G20 summit currently underway in Bangalore. Time for us to head into a short break, but up next, a defiant Vladimir Putin accuses the West of inciting a global war to destroy Russia. This after US President Joe Biden visits Kyiv as the war nears its one-year anniversary. A special report when we return. No relief for the people of Turkey and Syria. Another earthquake of 6.3 magnitude jolted Turkish southern province and northern Syria. 6 people have been killed in Turkey and hundreds have been injured. Fears of more tremors has kept people away from buildings in the region. Russian President Vladimir Putin addressing the nation in Moscow ahead of the first anniversary of the Ukraine war. In his address, which comes a day after President Biden's unscheduled visit to Kyiv, Putin has accused the West of inciting a global war to destroy Russia. He said, and I quote, "The West has begun not just a military and information, but an economic aggression against Russia." Ukraine said that Putin's speech has demonstrated his irrelevance and confusion.
They're betting trillions of dollars, and they are trying to continue robbing everyone else, and they're covering themselves with words of democracy and values. They're trying to label other countries and publicly insult them. and they are creating that image of enemy within their own countries in order to divert attention from corruption scandals within their own countries. The greater the range of these systems, the further away we will be forced to move the threat from our borders.
And that's Vladimir Putin. And with that, it is time for us to wrap up this edition of Business 360. Thanks very much for watching. Do stay tuned to CNBC-TV18. The news will continue on the other side.
Co-powered by IBM.